Let's talk about the global financial system, the hidden plumbing of the world economy. For decades, the US dollar has been the main pipe, the currency everyone trusts and uses. But now, countries like China are making bold moves to challenge that dominance. China, the world's second largest economy, is selling off US government debt and hoarding gold. These are not random market blips, they're strategic, calculated decisions. The dollar's dominance gives the US immense power, cheap borrowing, the ability to impose sanctions, and control over global commerce. If that power erodes, the consequences could hit everything from your morning coffee to your mortgage. We're witnessing a fundamental shift in global power happening right under our noses. This is a story of debt, gold, and a high-stakes geopolitical chess match. China isn't just playing a new game, it's building a new stadium, and the old one is starting to crack. So buckle up. The world's financial order may be crumbling, one gold bar at a time. How did the US dollar become the world's top currency? It's a story that shaped the modern global economy, and it all starts with a pivotal moment in history. In 1944, at the Bretton Woods Conference, 44 countries gathered to rebuild the world's financial system after the devastation of World War II. They agreed to peg their currencies to the US dollar and the dollar itself to gold, making it the anchor of global finance. This arrangement made the dollar as good as gold, stable, trustworthy, and a symbol of post-war recovery. The US economy was booming, and the world needed a reliable currency to rebuild and trade. But in 1971, President Nixon ended the dollar's direct link to gold. Many thought this would shake the dollar's dominance, but instead, the world kept using dollars for trade, especially for vital commodities like oil. The result? The US could print money to pay its bills, and the world would still accept it. No other country enjoyed this unique privilege. This exorbitant privilege allowed America to run huge deficits and fund its ambitions, from military spending to social programs, without facing the same economic pain other nations would endure. The dollar's central role also gave the US enormous geopolitical leverage. Most global transactions clear through US banks, giving America a powerful tool to influence world affairs. That's the muscle behind US sanctions on countries like Iran, North Korea, and Russia, cutting them off from the global financial system with the flip of a switch. But this power makes rivals like China increasingly nervous. They see how easily the US can wield its financial influence. They've watched as the US freezes assets and blocks transactions, effectively isolating countries from the global economy. Now countries are asking themselves, should we keep all our eggs in a basket controlled by someone else? Is it safe to rely so heavily on the dollar? The answer, more and more, is no. The movement to diversify away from the dollar is gaining momentum. The world is actively searching for alternatives, currencies, and systems that don't depend on US approval. And China is leading the charge, pushing its own currency and building new financial networks to challenge the dollar's reign. For years, China was the biggest foreign buyer of US government debt, over $1.3 trillion at its peak. America got cheap loans, China got a safe investment, but the relationship is cooling fast. China's holdings have dropped below $770 billion, a strategic move to reduce exposure to US policies. Where's the money going? Gold. China's central bank has been on a gold buying spree, adding hundreds of tons to its reserves. Gold is the ultimate anti-dollar asset. No government can print it, and it's insurance against chaos. But China isn't stopping at gold. It's building alliances to bypass the dollar, expanding the BRICS group, and promoting trade in local currencies. China's digital currency, the ECNY, could one day enable international payments without touching the dollar. These aren't isolated moves. They're part of a long-term strategy to build an alternative financial universe. The message is clear. China is preparing for a world where the dollar isn't king, and other countries are watching closely. The global financial map is being redrawn. The stakes couldn't be higher. Why does China selling US debt matter? It's a question that goes far beyond headlines and financial jargon, touching the very core of America's economic stability. Because America relies on foreign buyers to fund its massive $35 trillion national debt. Without their support, the entire system faces new pressures. For years, countries like China and Japan eagerly bought US bonds, helping to keep interest rates low and the dollar strong. Their investments made it easier for the US to borrow and spend. But as China steps back, the US must offer higher rates to attract new buyers. This shift is already rippling through the financial markets. Higher rates mean more expensive borrowing for the government, businesses, and everyday Americans. Mortgages, car loans, and credit cards all become costlier. The real danger isn't a sudden sell-off, but a slow, steady withdrawal, a death by 1,000 cuts. Each reduction chips away at America's financial foundation. As foreign demand drops, the U.S. government leans more on domestic buyers and the Federal Reserve, increasing its own exposure and risk. This can trigger a vicious cycle, printing more money to buy debt, leading to inflation, which makes the dollar less attractive. The more dollars in circulation, the less each one is worth. We're already seeing the effects: rising interest rates and a growing share of tax revenue spent just on interest payments. That burden is only expected to grow. That's money not going to infrastructure, healthcare, or education. Essential services and future investments are being squeezed out. China knows this vulnerability and is using it as leverage, carefully watching how each move impacts America's economy. By reducing its U.S. debt holdings, China is both protecting itself and pressuring America's economic weak spot, sending a clear message to Washington. The U.S. financial system is feeling the strain. Uncertainty is growing, and market volatility is becoming the new normal. The world is watching to see how America responds. Allies and rivals alike are recalculating their strategies. The era of easy money is ending. The days of cheap borrowing and limitless spending are behind us. The consequences are just beginning, and the choices made now will shape America's financial future for decades to come. China's move isn't just about better returns. It's a geopolitical power play. The real motivation? Self-preservation. After seeing the U.S. freeze Russia's assets in 2022, China realized its dollar holdings were a strategic liability. In a crisis, the U.S. could freeze Chinese assets, devastating China's economy. So, China is reducing its vulnerability, trading yield for security. Gold is a fortress. You can't freeze a gold bar in Shanghai. By promoting trade in yuan, China is building payment channels immune to U.S. sanctions. Every dollar of U.S. debt China sells is one less Washington can use as leverage. The message, your most powerful weapon won't work on us. And with every ton of gold, that message gets louder. China's global financial strategy is built on two powerful pillars: gold and the yuan, each playing a unique role in reshaping the world's economic landscape. Gold, a timeless store of value, has become even more important in uncertain times. Central banks around the world are ramping up their gold purchases, using it as a hedge against inflation, currency devaluation, and the growing risks associated with the U.S. dollar's dominance. Countries like India, Turkey, and Poland are joining China in this gold rush, steadily increasing their reserves. This collective move signals a growing unease with the dollar-centric system and a desire for greater financial security and independence. The second prong of China's strategy is the gradual promotion of the yuan as a global currency. While the yuan isn't fully convertible yet, China is making steady progress, establishing currency swap lines with dozens of countries, and encouraging the pricing of key commodities like oil and metals in yuan, especially in Asian and African markets. These efforts are quietly laying the foundation for a parallel, non-dollar financial system, one that could eventually rival the current global order. The goal isn't to dethrone the dollar overnight, but to create a more balanced, multipolar world where the dollar is just one of several major currencies, sharing influence with the euro, the yuan, and others. Such a shift would dilute America's financial power and give countries more options and flexibility in global trade and finance. China is patiently building alliances, forging new trade agreements, and developing alternative payment systems to support this emerging reality. It's a quiet revolution, unfolding steadily but surely, and it's gaining momentum with every passing year. Around the world, investors and governments are preparing for a future where the dollar is no longer the only safe haven, but one among several trusted options. The shift is slow, almost imperceptible at times, but it's undeniably real and gathering pace. And as this transformation unfolds, it's quietly rewriting the rules of global finance for the decades ahead. The strength of a currency reflects the strength of its economy, and America's warning lights are flashing. Decades of living beyond our means have left the U.S. with a debt load over 120% of GDP. Interest payments are crowding out spending on everything else. To manage debt and inflation, the Fed has raised rates, making life more expensive for everyone. Mortgages, car loans, and credit card debt are all costlier. The real economy is struggling. Growth is sluggish, good jobs are disappearing, and inequality is rising. The disconnect between Wall Street and Main Street is fueling instability. China and others aren't just worried about sanctions, they're losing faith in America's ability to fix its own problems. And the cracks in the US economy are too big to ignore, and the world is taking notice. What's next? The era of the dollar's unchallenged supremacy is ending. The dollar won't collapse overnight, but the transition will be messy and unpredictable. We're moving toward a multipolar financial world, US in one corner, China and its allies in another, and maybe the euro in the mix. This shift raises tough questions. Will a weaker dollar fuel inflation? Will higher rates trigger recession? What happens to global stability without a single anchor? The real question: who will lead the new financial order? Will it be a US-China rivalry, or a more decentralized system with gold and new tech? We're living through a pivotal moment in economic history. The decisions made today will shape the world for generations. One thing's certain: the old rules no longer apply.